MSTR. Let's bring on the fellas here, Dan, Hillary, and Dark Side of the Moon or Dark Side 2030. Apparently there was, an important spaces over the weekend. And I think this is really interesting stuff to follow. So I'd love to hear, Dark Side, if you could chime in on maybe what the conversation was about on Saturday or Sunday from your perspective.
Yeah, thanks for having me, guys. Really appreciate it. So we got an issue now with Strategy in as much as they've shifted gears from a convertible note strategy to a perpetual preferred strategy. And those perpetual preferreds carry with them significant dividends, unlike the convertible note strategy, which was zero to very low coupon and didn't carry with it large fiat obligations. So now that they've taken on significant fiat obligations, they have to make those payments. So there's really only three ways that Strategy can make those payments. One would be to sell common stock and take the proceeds and pay the dividends. Second would be to sell additional preferreds, and they have made it clear in their prospectus for these preferreds that it is acceptable for them to sell preferreds to pay the dividends of previous preferred holders, but we all know what that sounds like. And then the third option would be to actually sell some Bitcoin. Now, I think the real problem comes in that the flywheel, the natural flywheel that Strategy enjoyed, was their ability to create Bitcoin per share by issuing the convertible securities. And those convertible securities only became dilutive when the share price rose significantly. That's very different than the perpetual preferreds. So in my personal opinion, the flywheel is slightly broken, right? Because you're forced to sell securities to pay the dividends on previously issued securities. Now, given their current liabilities from both the notes and the preferreds, they could sell as little as 20 Bitcoin a day and easily pay off the responsibilities of the fiat responsibilities obligations of both the preferreds and the notes. Now, why don't they do that? If they did that, you would create a natural flywheel, and that flywheel would be that the CAGR of Bitcoin is greater than the CAGR that the interest rate they're paying on the perpetual preferreds and notes. So that's a simple to understand flywheel. Now this gets complicated even further, and maybe I'll hand it over to Dan to explain what a moving liquidation target is and how that creates an existential threat to Strategy through STRF and STRK.
Dan, please take it away.
Thanks, Darkside. I think that was a really good recap. And so I'm definitely the resident bull here, and I will definitely talk about the dividend payments, which I think are a really, interesting topic, especially because all this stuff is very, very, very brand new. So the one thing that's interesting about these preferred equity obligations is they've existed historically. Duke Energy issued a perpetual preferred static liquidation stock that went for about 40 to 60 years during the infrastructure build out after World War II. And the real key here is that Strategy is the first preferred equity issuer to have a preferred equity that has a moving liquidation. And what's a moving liquidation preference? The liquidation preference it's simply the amount owed to the equity holder in the case that Strategy becomes insolvent. So from a bull's perspective, Strategy won't become insolvent because the preferred equities are over collateralized 20 to 1. At times with Strife, it's even higher based on the Bitcoin stack. And the only way for them to become insolvent would likely be that the Bitcoin is lost or they don't own it or some sort of, tail risk scenario. But the thing that makes moving liquidation preference confusing, I think, and confusing for me, and I'm trying to work through it because, again, these are all new products, is so let's say Strife, for example, which is a senior preferred equity, right? That's the 30-year equivalent fixed coupon senior preferred. So right now it's trading about $112. You get a $10 dividend annually on that product. If it were to trade up to $113, $114, $115, $116, the effective yield on that goes down, right? That's how bond pricing kind of works. But as the price of that security increases in value, you still have 100, whatever the price is, it went from 112 to 116. In the case of liquidation, as a holder, you have a $116 claim over the Bitcoin senior to the rest of the equity holders in the capital stack again, in the case of liquidation. So this has weird implications for Bitcoin per share. So it's hard to know. So if the price of Strife goes up, will that reduce the Bitcoin per share for the common or for the junior holders, or the creditworthiness of the junior holders? Or does it not even matter? How do we value these things? Is the liquidation preference truly a liability? In the case of GAAP accounting, the liquidation preference isn't technically a liability. It's just the annual coupon obligation, which is a liability, which Darkside mentioned earlier.
All right. My first question, though, is maybe he's walked into a trap. Maybe there's unintended consequences he didn't see. But let's say he comes out and says, I'm going to sell 500 Bitcoin to a subsidiary to, raise some money, prove the model and the flywheel positive. And maybe the market says you changed your word again. You went back on the MNAV. You promised us one thing, then you changed your word. And is that a way, in a way, a trap, where he loses a lot of confidence or even more sentiment for doing maybe what seems to be the only logical way out? Is that sort of another maybe unintended consequence that could come from that?
Yeah, I don't think so. I think the market would be tremendously excited at the concept of Michael Saylor taking profits in Bitcoin. Remember, he owns Bitcoin at very low prices. So the concept of, let's see, he owns 640,000 Bitcoin about, right? The concept that you're going to sell 20 Bitcoin a day, it's nothing. It's a drop in the bucket. But you'd be funding the dividend directly from Bitcoin sales. Now, look, I'm bullish on strategy as well. I love Michael Saylor. I think he's an incredible ambassador for Bitcoin. But I think he's made a mistake. Is it a trap? That's a great question. It becomes a trap under certain circumstances if he continues to sell billions and billions of dollars of, let's take STRF, for example, and just following on Dan's kind of point, let's say interest rates go below zero. Now, that sounds crazy, except that we were almost there 5 years ago, right? So let's just go with it, right? What does STRF trade at when interest rates are below zero and they're paying a 9% dividend? Does it go to 500? Does it go to 1,000? Does it go higher? Well, I don't know, but with Dan's point about moving liquidation, right, all of a sudden the common shareholders become a meme stock, right? Because they don't really have any claim to the Bitcoin underlying strategy. That's a problem. Is it a trap? I'm not sure. Certainly taking on perpetual liability exposure, because that's what a perpetual preferred is. It goes on forever, right? Unless it's retired. And I'm not even sure these can be retired. That's a good question for Dan. But this perpetual liability exposure, right? How do you quantify exactly what the liability exposure is when it's perpetual? Right? With a bond, well, it's a 10-year bond. You can calculate out exactly what the dividend payments are going to be, the interest payments are going to be. But in a perpetual obligation, that obligation is unquantifiable. So as these products grow, let's just say he becomes a victim of his own success, and these things go from 5, 6 billion, 10 billion to 100 billion. Well, now you've got a problem, right? Because you have a significant amount of dividends you have to pay. If you're going to use your common stock, you're going to drill it below 1, right? And what happens if the MNAV goes below 1? Now, do you sell common stock below the enterprise value of the Bitcoin, right? Do you sell perpetual preferreds to pay the previous perpetual preferreds dividends? To me, that's not going to work. Wall Street's not going to stand for that, even though he can do it by prospectus. So now you're left with basically selling Bitcoin. And I would say you're better getting out before you have a problem and doing it out of necessity. Do it out of desire. Make the move now and kick off the flywheel, because this becomes a real flywheel if you can sell Bitcoin to buy Bitcoin and just sell a little bit off month after month after month, right? And on top of that, there's nothing stopping him from selling highs, right, and buying lows. Instead of saying I'm going to buy the top all the time, maybe I'm going to sell some tops and buy some bottoms. That makes sense to me. And then finally, I would suggest, look, Saylor's got the ultimate exit strategy, which is simply to start an operating company, becoming the largest trading desk for Bitcoin. Right. He's become the Goldman Sachs of Bitcoin, in a short period of time. Why is all of these profits being handed to over-the-counter desks, small broker-dealers, some banks, when Saylor is the largest flow desk in the world. He would become literally the Solomon Brothers of Bitcoin. And anyone who remembers Solomon...
That was the question I had when we talk about, needing 20 Bitcoin to pay dividends. Couldn't they generate a Bitcoin yield through a trading desk that could easily pay those dividends?
Yeah, of course, this would entail reclassifying the firm away from the technology operating company it is today into something else. I'm not sure what that reclassification looks like, but certainly that would seem to be the most logical path. If you had 80,000 Bitcoin to move, as we saw just within the last 6 weeks, wouldn't you call Saylor first? Right? Isn't that the natural phone call to make if I have 80,000 Bitcoin to sell? So yeah, I think that's where this is headed. I think when he makes that move to becoming the Solomon Brothers or the Goldman Sachs of Bitcoin, it's off to the races.
Do you think the target of getting into the S&P 500 is a hurdle they want to achieve before going in that direction? Because that direction seems very logical.
Yeah, it does. And I'll be honest with you, I'm 50-50 on this one. We were talking about it earlier today. I can make just as good an argument for them being added to the S&P 500,
right.
That being, look at their holders, right? BlackRock, State Street, Vanguard. You've got nation states, sovereign wealth funds buying MicroStrategy. Deutsche Bank, I think, just took down a large position of Strategy. So there's certainly some loud voices and important voices that would be for this. But then again, I look at the committee and what they did with Elon Musk and Tesla, and I get skeptical. So yeah,
good point.
You'd have to think the S&P 500 the committee would want to negotiate with him and probably push down his voting rights.
I don't think that's their modus operandi. But look, Josh Mandel, who is a time traveler, he said without any doubt, Bitcoin will be added, Strategy will be added to the 500. So yeah, if Josh Mandel says so, now I'll go 51-49.
Fair enough.
I imagine over a long enough period of time, that's probably that may be taken to 100%. It's just a time frame, is it?
Yeah, I think it's a time frame thing. I just don't think they get in necessarily. I don't think the odds are 50-50 even they get in this round, but Josh has said so, and I agree. He seems like a time traveler. What is the real appetite for the preferreds from non-Bitcoin oriented institutions and entities and things like that? Like where it seemed like they went to the convertibles and they pivoted because it just wasn't enough appetite, and that the entities buying the convertibles were just trading them and defending their short positions and just taking the cut. Is there a real appetite from, or even one to be built truly for these things to become sort of traditional instruments and replace sort of the U.S. Treasury yield curve? I mean, is this going to really build out a Bitcoin yield curve and hundreds of trillions of dollars are going to come through these kinds of vehicles? Is that sort of what you see that? What kind of success rate would you put on that for a company like Strategy?
What I can say about the converts is what I've heard from the participants in the market is that there actually wasn't a lack of demand for the converts, but the team at Strategy was extremely hesitant to continue issuing them and looked for a new product because of how predatory the convertible arb market is towards the actual stock, so again, they're desperately looking for some alternative, and that's how they settled upon these preferred equities. And to answer your question, in terms of like, okay, how much demand truly exists out there in the market, I think one thing we've seen recently is the initial IPO buyers riding these up to par value or somewhat close to par value, at least those with the cumulative dividends, and then a serious rotation out of these products. And so now I think we're just starting to get the inklings, the beginning of people becoming aware of these products and starting to allocate into them with the intention of holding. And in terms of the entire Bitcoin-backed fixed income yield curve, I actually think it's a hugely critical component of Bitcoin taking its role as a deflationary source of money, because if Bitcoin is truly a deflationary asset and USD will continue to be an inflationary asset, there exists a natural arbitrage between those two systems. And the best way to express that arbitrage is through the bond market. So you have to be able to tap into the bond market to funnel as much capital out of essentially USD, which sits in, essentially government debt, and then have it pumped into BTC at an advantageous CAGR relative to USD. So you have to offer a higher yield relative to the current treasury market, but a yield that's lower than that of Bitcoin to sort of, to water flows downhill, as they all say.
So Dan, you said when we started that you're the bull, but at the same time, you see this massive risk with these perpetual preferreds. Do you think that risk is really triggered by a large recession, a business cycle level recession that Bitcoin has not been through? If that is on the horizon, if a true liquidity crunch is on the horizon, is this sort of the filter moment for MicroStrategy if that were to occur?
Absolutely. I mean, perceived CAGR is ultimately how people continue to value both MSTR. Perceived CAGR of Bitcoin explicitly is how people right now value MSTR, and then how they're going to continue to value the creditworthiness of the preferred instruments. And if over a year's time, people or the market decides that the terminal CAGR of Bitcoin is sub the dividend obligations of the preferred equities, and that turns into a really kind of scary or kind of a market panic scenario where where MSTR would theoretically trade below NAV. I'm not saying that would happen. I'm just saying that provides now another opportunity, like it traded below NAV during the last pair, for participants who are bullish on BTC.
Right. Yeah. So it's I mean, everybody loves to talk about the Bitcoin CAGR 30%, and they run things out linearly, and like MicroStrategy is going up forever, but they're not factoring in massive 80% drawdowns, right? And thus we now have the meme that the 4-year cycle's over and it's going up forever. If that's not the case, then the risks that you guys are envisioning could really come to fruition.
Well,
is
that's
that a logical statement, or is that
likely temporarily? I think the dark side's point.
I guess this seems like it's event driven.
Yes.
As opposed to structurally driven.
The possibilities of a deflationary spiral, I think, are out of the market. There's just too much money been printed and too much left to be printed. I think more likely we see a crack up boom, and we don't see these. Look, we haven't seen a real down move in the market since COVID, and I don't think you see one again. Look, I'm exceptionally bullish on strategy once they adopt a pure flywheel. And the pure flywheel is not selling common to buy Bitcoin or to pay dividends. The pure flywheel is acquiring Bitcoin and then paying the dividends by selling off a small amount of Bitcoin. That's a pure flywheel, right? As long as the CAGR of Bitcoin's higher than your dividends, you're just raking in money. And you can do that at pretty large scale. So yeah, for my 2 cents, I think you're better off going early, right, and adopting this strategy than doing so out of despair. Because if you do it out of despair, the market will punish you.
Right. Right.
Dark side, I have a question on that. I was super bullish on the guidance prior to the change that common would only be issued to pay the necessary dividend obligations, and then they provided some MNAV guidance elsewhere. I'm okay with them issuing common so long as they trade at a premium, and only if they're allowed to, if they're only selling the common to pay the preferreds. In the case of the common trades at a discount, they have to sell Bitcoin to cover the preferreds.
Look, what I have tweeted and what I've recommended is they should just come out with straight guidance above 2.5 MNAV, or make it 2, whatever the number is. We're going to sell our common to pay our dividends and pay our responsibilities. Below that number, we're going to sell Bitcoin, right? And take the pressure off the common shares, let that breathe, relieve the market of any type of Ponzi-esque approach to selling securities to pay the dividends on previous securities. Now, I think this thing would take off. So for me, it's really simple, and it's an easy move for Saylor to make. So we'll see. Maybe he's waiting for S&P 500 inclusion before he makes a change. Who knows?
Interesting.
Fellows, this has been fascinating. Thank you so much for joining us. I really appreciate it. Please hit like and subscribe if you guys are enjoying the show. There's so much more to talk to you guys about, but we got to get back to the program. Thank you so much, guys.
Thank you for joining us, guys, and providing the insight.
Pleasure.